Good morning, traders, and welcome back to It's Crypto's trading channel. The time has come now to make an updated analysis on the situation we are currently seeing on BTCUSDT. Obviously, everything played out as I projected. I explained to you guys when the market was here exactly why we expected this wick to get filled to the downside and the market to go and hunt the liquidity that was below this level of support. And that's exactly what the market has done. I made an update, a quick update the day before yesterday when the market was here, explaining to you why I expected a retest of 4 hours supply and then the move to the downside. And as you can see, it played out exactly as we expected. We did manage to capitalize on this move. We entered a short at this zone with 20 times leverage, and the market melted to the downside and filled in the wick on the weekly time frame exactly as we anticipated. Now we have hit our target on this short. We could probably come a little bit lower, but we have secured our profit. Our position is closed on this short. I think it was around 100% profit with 20 times leverage. So a nice trade here. So as I was saying, now things are getting interesting for the next potential move. So let's clean our charts and start from the monthly time frame. So here on the monthly time frame, everything is as expected. We are filling this wick to the downside. If you remember in my previous multi-time frame BTC update, I expected this wick to get filled to the downside, and that's exactly what the market is doing. So we have this level of support all across this zone. We do still have 25 days left of the monthly candle. It's very important that this monthly candle, this current monthly candle, does not close below this zone. If the monthly candle closes below this zone, it's highly likely that we come down and test the next level of support at around 30k. I do not think we will break below this zone. I think once we fill this wick, we will bounce, as I'm about to show you here. So anyway, this is a very important candle to notice. We cannot close below this zone, or we will see more downside. So with that, bearing that in mind, and my bias is bullish here. I expect the monthly candle to close above this zone and make the continuation to the upside, probably in Q2 or the beginning of the next month. So we have this impulse and correction. I expect the market to make the continuation to the upside if this monthly candle holds above. So we take our Fibonacci from the low to the high of the monthly correction. The minus 0.272 fib will be our monthly upside target, and this is where I see the market making a new higher high and a new all-time high at this zone. Let's drop down to the weekly time frame and see what we can see. So here on the weekly time frame, again, everything is still bullish at the moment. We have higher high, higher high, higher, high low, higher low, higher low, and higher high, higher high, higher high. So bullish market structure remains on the monthly and weekly time frame at the moment. We also have this very nice level of support, this structure level all across this zone with previous resistance here, break to the downside, then it acted as resistance again, break to the upside, acted as support, again acted as support, and again we are about to test this level as support, and you can expect a reaction from buyers at this zone. So with that being said, let's now drop down to the daily time frame. This is where things get really interesting. I've noticed a very strong correlation between this crash and the crash that we had back in May. So let's dive straight into it here. So back in May, when the market was here, I showed you guys this wedge formation, and I explained exactly why we expected the market to fill in this wick to the downside and then hit the lows and make the move to the upside, and that's exactly what the market has done. Now, this is a strategy that we use with students over and over again. This is a manipulation strategy. When the market forms a bearish wedge in a downtrend, but we have bullish price action on higher time frames, you can expect this wedge to be a manipulation, a seller induction in this case. So what happens when you have a bearish wedge and you break it to the downside? Sellers enter the market here. But as you can see, we hit the low of the wick exactly as I anticipated and made the move to the upside. Also, what we can see inside of this wedge formation is this beautiful W formation. So we have this W here, very easy to see, and we have a very nice W formation. Now, this is also a pattern which I speak about over and over again. You'll hear it in all of my videos, and the reason being is because this pattern happens multiple times throughout all financial markets, and it is a very, very consistent, probable pattern. So we have the W formation. We have the second leg of the W below the previous low, and this is what induces sellers into the market. And as you can see, we broke the pennant, hit the low of the wick exactly as I anticipated, filled this wick, and made the move to the upside. So bear with me here, guys. Stay with me. We have the W. Here on the here is the neckline. Let's identify the neckline of the W formation. So we made this seller's induction, this bear trap here, and made the move to the upside. Then what happens when the market was here? So we broke above previous all-time high prices with this pattern, exactly the same pattern here, but in reverse. So here what we have is this bullish pennant formation. We have a clear bullish wedge here. Let's draw it in so it's easy for you guys to identify. So this is a very clear, easy to see bullish wedge formation here. And the market broke it to the upside, breaking above previous all-time high prices, breaking above this high. So what happens here if you're a retail trader, if you trade price action, not strategies, the market broke above the high, you enter price discovery mode, long. Everyone was longing at this position, and we did exactly expect the market to come into this area of liquidity, and that's exactly what the market has done. And we did take a short here. We closed it far too early. We closed it around this zone, which is obviously a very bad move. Nonetheless, let's talk through what we had here. So we have the wedge. We have the break to the upside, which induced buyers in this case, and then the dump back below. We have the wedge. We have the bear trap, which induced sellers, and the pump above. So we have this W formation, which I've identified now, and we have this M formation. You can clearly see we have exactly the same pattern, but in reverse here. So we have the M formation, we have the higher high above this high, which induced buyers, and the dump into liquidity. So we've identified the neckline of this W formation. Let's identify the neckline of this M formation. So as you can see, we broke above the high, induced buyers, and dumped back down. Where did we dump back down to? We dumped back down to the neckline of the W formation. Now, I speak about this over and over and over again. When we have a W formation, you can expect the market to complete the pattern at the neckline, which is previous resistance turned support. And that's exactly what the market has done here. We have a W formation, a neckline, and we have completed the pattern at the neckline, previous resistance turn support. So as you can see, everything is playing out perfectly here. So now what do we have? We have a W, we have an M. What do we have here? If we draw in the current pattern that we have in the market, is exactly the same pattern as we have back in May. Now this is the correlation which I've mentioned at the beginning of the video. We have this wedge formation. Now it's a little of an irregular wedge. It's a bit of an irregular wedge here, but nonetheless, it is a wedge. We also have the fake out above the wedge here, which induced bulls, and the dump back below. Here we have the fake out above the wedge, induced bulls, dump back below, and filled this wick. So let's identify our wick now, because this is a very, very important level to identify. This is the wick that we have filled to the downside. Here, when we filled the wick to the downside, we hit the low, which we're about to do, and we made a very strong move to the upside. Here, we've probably just induced sellers into the market. People were probably longing at support. They've been liquidated. The price has now broke below support, and they have probably entered shorts. This is the wrong thing to do. Now is the time to be looking for longs in the next coming days. So we've hit the low of the wick. What we can also see is a potential W formation. If we go down, up, down, we have a potential W formation. Exactly the same as we had back in May. Exactly the same as we had back in May. So we have this W formation. We have a lower low about to break below the lows, and we can expect a very strong reaction from buyers inside of this zone. So what we are going to be doing, how we are going to be approaching this with students, we will be waiting all inside of this zone for a confirmation similar to this, something like a bullish daily engulfing candle, some sort of confirmation inside of this area to look for a long position to capitalize on this next continuation move to the upside. And this is exactly what I expect the market to do. We could enter a position here as soon as we see correct confirmations. As long as we give the stop loss enough room, we could still give it a 5 times leverage and potentially be looking at a 300-400% move to the upside here. So this is our trading plan. If the market does break and close below this zone, it has to close below this zone from a daily perspective. This setup becomes invalidated, but I don't expect that to happen. I expect maybe a fake out here a little bit lower than this low, and then a strong reaction from buyers.